Hello everyone, and we're going to start off this week with a BTC supply shock, or one that's happening soon as ETFs are buying 3x the new BTC supply, that is including the ones they are selling. Bitcoin is facing renewed calls for a supply shock as exchange reserves hit 7-year lows. Every time, even when Bitcoin is falling, exchanges just lose more and more Bitcoin, which means they don't have the Bitcoin if people want to buy them, which means the Bitcoin will eventually have to be bid up. The ETFs are buying all the excess Bitcoin. So even if you're selling, you're basically just selling to BlackRock right now. So sooner or later, probably later this summer, this supply shock is going to hit and we're going to go up. But yeah, just be assured that ETFs are buying way more Bitcoin than coming out. That means they're buying the ones that people are selling, which means you're selling to them, like BlackRock, or they're going to have to bid the price up. So that's why price really can't stay low for all that long, because the demand is there. So we have to go look at what this brings to the Bitcoin liquidation charts to start the week. Now, over the weekend, not too much happened. We're at 66, 67K. We didn't really breach any of the short liquidation points. We did actually breach one of the long liquidation points. And that actually was that bump that brought us back down to about 66. But after that, we kind of liquidated the other way a little bit. And then we came back to 66.8 because of the strong demand, as you just saw in that other article. But right now, we are much, much closer to the long liquidations, and we can start liquidating those longs than the short liquidations. Like the first short liquidation, we're at 66.8, is not until 66.3, but realistically, we don't really get into the long liquidations until about 66, whereas the short liquidations, which would push us up, there's a couple right near us right now, but they start at 67, which is only about $200 away. And then we really get into it by about 67.2, and that could bring a cascading effect to get us about 67.6, and then push us past 68 and more. There on the one day, there isn't really all that much past 70K though. But then you have the 7 day with a much greater value. And as you can see this line right now, we are much closer to the short liquidations than the long liquidations. I think in the long run though, right now, there's still more long liquidations possible if they push price way back. And remember, these liquidations really only matter if price moves very fast. If price moves slowly towards one liquidation or slowly towards another liquidation, then it really doesn't matter all that much because people have time to adjust. But if it just moves like several hundred or several thousand points all at once, that's when the fireworks start. And that's why it's important to see which side the arrow is actually closer to. And right now we're much closer to the short liquidations than the long liquidations over here. So I think we are more likely both on the 1 day, 7 day, and also on the 30 day to actually get a price bump than a price dump within the next week, as long as nothing really, really bad happens. As the stuff that's really, really bad, I'm not really sure what those really bad things are, but something always manages to happen, like Gensler says something. Because remember, if you look at it, there are some shorts just sitting around, maybe 800, 900, 1,000 back from where we are, that we can liquidate some longs. But if we get some good news, I mean, there's a lot to liquidate here, just 200 or 300 points. So right now, I would say you have maybe a 70-75% chance getting a spurt up to 68, whereas a 20-25% chance getting a spurt going down to 65 or further right now, just by the distance these have. And remember, most of the longs are gathered between here and 67 or 68, whereas a lot of the shorts don't really start liquidating until you get to about 64. So if we get to about 64, we're really, really in trouble because we can liquidate all the way down to 60, because there's another big group of liquidations around 62. Whereas when we get past 68, at least on the month, the amount of shorts gets much, much smaller. So we might actually have a real problem pushing past 70, even if we do liquidate the 68 ones. And remember, we have to go from 67 to 68 to 68.5 very, very fast in order for these to matter, fast enough where the amount of people here can't really completely react on time. Right now, there's still more stacked longs like in the longer trail than stacked shorts. So the potential for a huge pitfall is actually still bigger in the negative region, but the likelihood that we'll get a small positive movement is still way better than a likelihood that we get a big negative movement next, because we are much closer right now to these liquidations. Of course, this could change at any time. One whale could easily change all of this right now, and some of these, like, they're not real. So like when you see something happen, when you see something getting closer, maybe some of these bots will take some of these away. It's very hard to point. I'm just looking at the data as it is right now, but this could change at any time with some whale play or maybe some like AI bot play. I'm not really sure. Of course, like the orange ones are the ones I'm really looking at, the 100x leverage. Those are the ones that are really, really important. As you can see, they stick out here at 67.9. And also we have the big one here at 64.1. But like I said, the shorts liquidation is closer than the long liquidation. So most likely we're going up unless we get some bad news to start next week. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.